Hey guys, AD Demon back for another video. Today we're gonna today we're gonna kind of talk about the market, how it's unfolding, what I'm trying to do as a trader, and just some general update on my trading journey, kind of some things that are going on that I like. I'm just gonna showcase it, and then I'm gonna showcase one possible trade that I like, and maybe talk about the crypto market as well. Let's get into it. Okay, so on AUDUSD, I had a little bit of a revelation with this red line here. Even though it's just a red line, it means a lot, and I placed it, and then I went back. I asked ChatGPT to tell me what it is. It actually is the first time. So it's called a supply zone anchor, right? It's called a supply zone anchor. Why is it called a supply zone anchor? Because this is the first time the sellers created a imbalance with the buyers and were able to decisively change the trend from a leg up to a leg down. So previously I would have kind of looked at the market and been like, okay, a higher low, a higher high, higher low, higher high, higher high. Okay, I don't really know what this is. And then this is where my ideas stop. I have this and I have this. This is a lower low and this is a higher high. So what does that mean? That means we're in a sideways market, or it didn't really make sense to me, because if we're obviously in an uptrend, how can it make a higher high and then a lower low, or a lower low right here, right before? So anyways, viewing this, I would try to either find price to buy here and to go up. That's kind of my idea, because it's an uptrend. But anyways, when I get into the more technical side of it, I can see that this candle right here and this low are very important, because when price made the high, instead of kind of like confirming that it's going to continue to go higher, it actually created a supply zone anchor, because this candle decisively won to the downside and broke this low. So then I can reliably put a line here, like no fair value gap, no nothing. I could just put a line here and then try and trade off of it in the future. So yeah, so the supply zone anchor, basically price went down so suddenly that there are a bunch of resting orders and a bunch of liquidity above this level. So much so at this level specifically that it got rejected twice, trying to absorb some of that liquidity, and it went back down to the low. But still, we have the buyers that are like, okay, this is still cheap, I'm gonna buy it and send it back up. So every time price hits it, it absorbs some of that liquidity. It absorbs some of that liquidity even here. And in the future, I can look at a zone like this where I can see that sellers decisively created an imbalance to the downside, and I could be like, okay, I'll probably want to take a sell right here, and I'll probably want to take a sell right here, right? So that's the main idea that I came up with. And even here, this is a demand zone anchor. So looking at the volume, we can see that the volume on this candle is actually a lot higher than the rest of them, meaning that even with a huge amount of trades, most of the trades in the large amount of trades that there were actually bullish. So market decisively won to the upside here, and this is the start of the move. So reliably I could put either as a level here or probably a level like this, maybe like this. Yeah, like every in trading, every case is different. There's no two situations in the market that are going to be the same. So you kind of have to use your this is the thing that's hard about trading. You have to integrate your intuition with like the intuition that you feel from your subconscious of how the market's going to go with the technical analysis like you have, and then you're able to kind of guide your trading in the right direction. So here was the level of the supply demand zone anchor, and here was the level of the supply zone anchor, right? So two vastly different levels, or vastly different regions in the candle, and even on the chart regions, right? Like no two situations are going to be different, or going to be the same. So next, getting into kind of more of recent times, we had the Fed. We had Jerome Powell have a huge meeting right here, which he kind of like 65% hinted at a rate cut in September, but he still wasn't sure, right? Especially with the pressure that Trump is giving him and all that stuff. So people took it as very dovish to the dollar, right? So they were able to finally send price higher, respect this zone of liquidity down here. And then what it created is from here, I placed a fib. No, I placed the fib here. Yeah, this could be a demand zone anchor too. But yeah, essentially price respected the 618 fib level, and it went from down here to the take profit. That would be the like psychological level of 6500, and then consequently it aligns with this Fibonacci retracement as well. So then price was able to come back up and right where it needed to be, where the liquidity was, to keep attacking the zone, right? And then we saw a pullback from the top liquidity zone. It got enough liquidity down up here. You can see boom, attacking liquidity, boom, sellers getting together, and then finally it dipped down and just to the 0.5 level. So what I outlined here, I didn't actually take this trade, but what I outlined is the breakout that happened. So now people are seriously looking at the 0.618 fib level, corresponding also to 0.65 price level. And what we saw is a big amount of liquidity to the upside, or a big amount of volume, which ended the candle to the upside. Strong buying signal right here. And then we saw price come back up and retrace down, allowing for even more liquidity to get scooped up and for price to go up. So here would be a safe breakout trade where you buy it at the fib level. You have your stop loss right below the 0.5 fib, and then take profit like at the start of the liquidity zone, right? So I would even put take profit like here. So why this is important is because when price makes such a decisive move to the upside, a lot of the algorithms and tools that traders use, they are able to detect, for instance, this buy, and then they're like, okay, they need to layer their entries. So they need to enter here, enter here, enter here, and they want to enter here too. So they do all of that stuff, and they're able to send price back down here, and then finally have it go up. So it's not really retail traders, not like getting stop hunted, but it's more the institutions and algorithmic trading bots that are like, we gotta send price back here. Let me skip this one. Like this. Yeah, and generally a trade here would be good, especially with this signal, and not necessarily this candle. Like, I don't like looking at this candle, but we just saw it retrace, so that's why I like it. Yeah, and we could also see the same thing here, right? So we have the strong bullish potential, like even price action here. With other currencies, we saw price consolidate down to the 0.5 level of this move, between this level and this level. But on Australian dollar, delete this. On Australian dollar, we didn't see much of a move to the downside. We didn't see a lot of selling pressure. We saw more continual like pushes to the upside, people layering in their positions, and then finally we have the decisive move right here, and then we even have a retracement down where people are still uncertain, and then kind of like a slow move back up to where our liquidity is. So eventually we're trying to get into these liquidity pockets for stops to get hunted, for the take profits to get filled, for the resting orders that are here from this price zone anchor to get filled. So traders they're just targeting wherever the liquidity is, and that's kind of where my mind needs to be. It needs to be where let's have price go up to, let's have price. Sorry, I'm gonna repeat that. We have price right now, right here, anywhere here, right here. Where's our liquidity? Okay, our liquidity is down and our liquidity is up. So either I want to see a breakout of the 0.5 right here, or I want to see a breakout of the top right here, and then I can take a breakout trade to the upside, or this is aggressive, or wait for a retracement and then take the trade. Same thing here. Either I want to aggressively take a trade, or I want to have a retracement and then trade and then take profit at the liquidity. So reliable trades, nothing crazy. We're just targeting liquidity. We're not trying to dictate for ourselves where the market's going to go. We're just allowing the market to do its thing and just joining the market when it decides, okay, this is the liquidity I'm going to target, right? Even here, we could probably see, I don't like how it didn't take too much liquidity. So again, if it took a lot of liquidity, it would have just headed down like it did right here. But this, for some people, is a retracement. It's a sell order here, or it's a signal here. But again, there wasn't enough volume in these candles right here. So this could be a sell, but I'm not feeling it. So yeah. So basically that's it for AUD. Take a quick look at JPY. JPY, I didn't do such a deep analysis of it, but just from looking, we have our liquidity here. And we have a grab, sell off. I'm not sure if this is the 0.5. Okay, again, respecting the fibs. So it went down to the 0.23. If I wanted to technically, like, yeah, it's a choppy market on JPY. We're kind of in the middle, so not really much I'm gonna say about that. Next, Bitcoin. Bitcoin's been continually going down over the past weeks. I liquidated all of my crypto on Solana. I like where I liquidated it, about here, but we're still seeing some. It's gross. I don't like how it looks. It's really gross. We have a channel. Yeah, not even like. It seems to me really gross how it's moving. I don't like the lack of volume and liquidity that the market is offering. It didn't do much. I don't have as many tools to trade this. So for example, taking a short position is not possible for me, and I have to pay 1% fees on every single trade that I do. So I just have it in USDC. Probably not a good investment, because if the rates get cut, dollar's gonna tank. But yeah, it's really choppy. I really don't like it. Doge, respecting the fair value gap, but it is attacking the liquidity. So we're probably gonna see crypto, sadly, continue down. Yeah, the whole space is just messed up for crypto. You have people on Twitter talking about, oh, this is the move, this is where I'm getting in right now, and price is gonna go to 200K. Like, guys, do we not see price action? Do we not see how gross this looks? Like, it genuinely looks gross. I wouldn't even touch this with a 10-foot pole. Even like AUD, I'd only take a scalp. I wouldn't take a reliable, like, trending trade. We're kind of, all of us are waiting for the Fed to talk and pricing it in. Like, market doesn't know how to price in the news, because he was really, like, iffy on cutting rates. He doesn't want to cut rates, but he's kind of being forced. Trump fired that one Fed employee. So it's a turbulent time. I wouldn't say it's volatile. It's a turbulent time. Volatile would be like huge swings, but we're not seeing any huge swings. Not many people are trading these things. Not as much as when Trump first got into office, because that was absolutely insane. But yeah, I generally don't like how crypto looks now. Okay, on to the last topic of today's video. I'm gonna talk about I have a algorithmic trading bot that I've been working on. I'm gonna have to blur that thing out in post-production. I have a algorithmic trading bot that I'm working on. It's running from my laptop, and I changed some logic on the bot. Let's see. I changed some logic on the bot, and before it wasn't trading at all, and now it's actually able to make trades. So here we could see it took a sell. it just wasn't enough. It wasn't the right time. Yes, market did the right thing that I wanted it to do for my algorithm, but again, it just wasn't the right time. It hit the stop loss. Even here, we could see that stop losses were 100% being hunted, and my stop loss sadly was hunted as well. And yeah, right now we're in the first trade that I've seen live that is in profit, which is amazing. So hopefully market's gonna go in my direction, but it's a huge work in progress. We have a bunch of orders to buy, sell, whatever. And yeah, I just wanted to show you guys, like, I coded this bot from the ground up using Python, and anyone can do it. Anyone with a computer can do it, can figure out how to run it. And I just have it running 24/7 on my laptop. I'm sure you could find some server that can run it for you for very, very cheap, but I chose to do it on my laptop. And we're having, yeah, we're seeing how it goes. It's a work in progress, but as you can see, I'm really proud of the fact that the fact that it actually made trades. So what I changed is the expiry. I had the expiry on about 5 hours. I changed it to 24 hours to kind of allow the market to fill the orders. But yeah, we could see it's taking a bunch of trades now, and they're getting stopped out, but it is what it is, you know. That's the reality of trying to make money in a zero-sum game. It's like you're fighting against the current. Because everyone's just trying to make market, and everyone's just trying to make money, and you as well, and you're basically taking their money. But it's the people with the best technology that's who makes the money. So yeah, guys, that's basically it for today. I appreciate you guys for watching. The 5 of you that are here. I already came to school. It's my 3rd day here in school, and school starts next week, so I have a lot of time to look at markets, refine my skills, and all that stuff. But yeah. When I made the last video, it kind of like drained my energy. So I made the video. It took a lot out of me to make it, especially talking for 30 minutes straight. This video is about 20 minutes. It's really hard to analyze all the markets and talk to them, talk about them for a while, just nonstop, just rambling. But it is what it is. I'll have these videos in the future to look at. So I'm doing this for myself, so I can look in the future, see the mistakes that I make in my trading, how I think. And yeah, so I appreciate all the people who watched the video. Thank you guys. Hope you guys found it interesting. If you guys have any questions, ideas for future videos, I would appreciate it. I'll consider them. But Yeah, I gotta make this less draining, because it takes a lot out of me to make a video, especially talk to no one. It's weird publishing it too, but yeah. If you guys have any questions, leave them in the comments. Thank you guys for watching. I'll see you guys later. Peace.